Good afternoon, everybody, and welcome to our latest Meet the Management podcast. My name is Marc Ashton, and for those of you who are familiar with the series, you will know that we are passionate about assisting building a vibrant investor ecosystem in South Africa. And one of our passion points is obviously to assist businesses that don't typically get media coverage around their strategies, investment opportunities, etc., particularly those listed on the JSE and Cape Town Stock Exchange. Today, I'm joined by John Whall, CEO of Heartwood Properties. John, thanks very much for your time.
Yeah, thanks very much, Mark, and thanks for having me on the show.
Awesome. John, just very quickly, I mean, if we look back at the property sector in South Africa over 2023 going to 2024, sentiment seemed to be quite negative around the outlook for it. There were a lot of concerns around vacancies, the work from home environment. And yet suddenly there seems to be a bit of a sense of life in the sector again. Maybe just before we get into your results, anecdotally, what are your thoughts about the sector, and are you feeling relatively optimistic about its outlook?
Yeah, thanks very much, Mark. So what we've seen, I mean, being property developers, if you look at the industrial sector, I mean, we're quite involved in the Cape Town market. We've definitely seen, the vacancies are at, I'd say, an all-time low, and this has resulted in existing rental prices actually going up quite high for good stock. So we've seen a lot more development proposals and tenants coming to us looking for new warehouse space in that market. And you can see that, the new development rentals are obviously higher than existing, but they're definitely coming closer together. So I think that's quite a good thing, and we're expecting, with the low interest rates, for this trend to continue. On the office side, I mean, there's definitely been a big uptick there. We've seen, after 2020, a lot of work from home strategies and very little development taking place in the last 5 years. And there was some growth and people actually moving back into the office. There's actually a squeeze on good space, certainly in Cape Town. And it's very evident. And even our portfolio in Johannesburg, we've seen, increased values and increased demand from tenants. But this is for good office space. So for us, we're quite positive going forward in this environment.
You briefly touched on the interest rate environment. Obviously, we've just had a recent interest rate cut. What's your sense of which way rates go from here? I mean, have you got any thoughts in terms of your long-term planning as to what interest rate environment will look like going forward?
So we're expecting sort of low inflation, and I'm no economist, but we're not even expecting this interest rate cut. I mean, we were just thinking, we can manage it from here. The ideal situation for us is around a 10% interest rate, which you'll see more cuts coming through, but we're not really holding our breath on this one. I mean, we think maybe another one, but we're not expecting any massive increases in interest rates. I mean, that's what our view is at the moment.
Maybe coming back to your own financial results now, it looked like a pretty solid year. Maybe just take us through some of the highlights, and if somebody who's not familiar with your financial results, what should they be looking at, and what are kind of the things you're particularly proud of?
Yeah, okay. So we had quite a big increase in revenue, as you can see there, 29%, and this is really as a result of a new development that came online. So we have the rental coming through for that. And then this did flow through to our profit line. I mean, if you look at our profit or income statement, you'll see that we had quite a big revaluation for the year of our portfolio. And a lot of this is actually the office portfolio, which we have written down in previous years. And it's, as I was saying, it's come back, it's improved, and the rental rates have improved. So we've also, another thing that we did this year is, when we finance our developments, we have financed them individually as we do them, and we negotiated a portfolio lend for our entire portfolio this year, which took effect in early December, which has given us much better interest rates and also better terms than we had previously. So this will actually flow through in the current year. So we should see the interest costs, which has a positive impact on our bottom line. So yeah, we are pleased, and we set up to take advantage of this market that I just spoke about going forward.
One of the standout factors, if you look at your results, very, very low vacancies. I mean, what do you attribute that to? Is it primarily just the nature of your clients, long-term leases? I mean, just maybe some context or color there.
Yeah, sure. So our Cape Town portfolio is mostly warehouses on long leases, single tenanted. So we really don't have an issue there, and they're all relatively new properties. In Johannesburg, we've got two office parks that are multi-tenanted, but they're very well positioned, and they're pretty new, cool designs. And we find that if we do lose a tenant there, we find it relatively easy to find new tenants at good rates. So that's where our 1% vacancy is, but we fill them very quickly at this stage.
And coming to your strategy, I mean, you made the point early on that you guys are primarily developers rather than long-term owners of assets. I mean, that makes you relatively unique if you look at the kind of listed property environment in South Africa. What's the thinking behind that strategy, and what are kind of the pros, if somebody's looking at your business for the first time, pros of that as a management or investment strategy?
Yeah, thanks. I mean, I think this is a very important point about our business. So our skills are property development. I mean, and that's where we make our money. We look at our returns over 3 to 5 years in a development, and we target our hours of between 25 and 30%. So as an investor, I mean, a lot of guys look at the property sector and they sort of want a long-term investment with dividend flows. I mean, we're not that. I mean, we're a capital growth investment story, but I mean, our strategy is to build a portfolio, which we're busy doing, and then to exit. And that's very important. And that's when the cash will flow back to our investors. And we are looking, as we go into this growth cycle now, I mean, you look at that slide there, we've got a lot of potential developments that we're looking at. I mean, it's probably looking better than we've seen before, and we're very well positioned to take advantage of this. We plan to exit this in the next 3 to 5 years, and then give a substantial dividend back to our shareholders and then start again. And so that's where the value is in this business.
And looking at these developments, I mean, those, I've looked at this presentation, I've got a little bit of a sense of it, but, if you look at these particular developments, any that particularly stand out for you that you get particularly excited about, and reasons behind that, those particular assets?
So yeah, I think a big one for us is, industrial land in Cape Town is very, very difficult to come by. It's expensive. And there's always issues, it's never ready to go. So we have managed to secure very good land at the Bridge development, which is a mixed-use development between Stellenbosch and the N1. And we're very excited about that. I mean, we've secured one deal on a section of that, and we're busy working on another one. And that's really prime industrial land where, the long-term value of an investment or development in that area will be fantastic. So we are very excited about that. And that'll come through the next 18 months or so in the development pipeline.
I thought the slide was great, just to kind of encapsulate. I mean, I think one of the biggest challenges you always have is looking at a management team and asking whether or not they can execute. I mean, there seems to be a clear trend of being able to grow value in a portfolio. If you're an outsider looking at that, is this kind of the metric you guys measure yourselves against as a management team? And kind of if you look at the slide a year from today, what do you think it's going to look like?
Yeah, so this is one of the metrics that we'd measure ourselves on, the growth of the balance sheet. I think the big metric, I suppose, is when we do exit our portfolio into cash. But yeah, I mean, this is definitely something we would want to continue growing, and continue growing at, I suppose, in real terms. So yeah, and looking at our pipeline, developments are quite lumpy and ours are quite big, but yeah, we want to continue on that trend for sure. No, definitely.
Excellent. John, last question before we wrap up for today. Any kind of message that you'd like to pass on to your shareholders or somebody looking at your business?
Yeah, I mean, I think we've now established ourselves in the Cape Town market very well. I mean, and I think we were well positioned. We're getting the inquiries coming directly to us now. And in our market segment, where we focused on the sort of 4,000 to 10,000 square meter warehouses, I think we're very, very well set up for for the next 18 months to sort of conclude on some of these deals now. So yeah, we're very excited about the future.
Excellent. That's John Whall. John is the CEO of Heartwood Properties. John, thanks very much for your time.
Yeah, thanks very much, Mark.